Howdy, swings. Today, the Fed shared some encouraging comments that seemed to lift the market a bit. As we anticipated in the last video, the market closed in the green, but it appears the reaction was stronger than we had expected. This marks the 8th consecutive green day, pushing the S&P to its 5th resistance level at S&P Index 5650 from 5200, which is quite notable. Will this rally keep going, or could the market face a downturn? Let's check out Fullhapce daily swing market forecast for some insights. Daily market index movements are as follows. The market had a pattern that was somewhat like the previous day as there was a drop early in the morning, but then things improved. Nasdaq and gold saw relatively significant gains. Oil prices decreased by around 3%. S&P 500, 5,608.25, 0.97% up. Dow Jones, 40,896.53, 0.58% up. Nasdaq, 17,876.77, 1.39% up. Russell 2000, 2,175.3, 1.1% up. Gold future, 2,542.6, 1.76% up. Texas crude oil future, 74.49, minus 2.82% down. Here is daily sector performance. Almost all the sectors were green. Semiconductors, internet, banks, drugs/biotech, certain restaurants, travel/leisure, autos, and housing/building materials did well. No major groups were significantly underperforming, but there were some weaker spots in consumer discretionary, consumer staples, staple retailers, and tech. Here are the reasons. Stocks continued to rise, influenced by important factors from last week. There wasn't much significant news on Monday. The leading index for July was mentioned. There were some accommodating comments from the Federal Reserve. There were mixed messages from the Middle East. Investors are looking forward to hearing from Powell on Friday. Many are particularly interested in NVIDIA's upcoming results and guidance on August 28th. Here are things to consider. The overall market trends seem to support the possibility of higher stock prices, with favorable economic data, easing monetary policies, and resilient corporate earnings. Federal Reserve officials are suggesting that interest rate cuts might start at the upcoming meeting on September 18th. Despite poor financial forecasts, some consumer and retail companies' stock prices have not dropped significantly, indicating low expectations in this sector. While stock prices aren't particularly cheap, they aren't excessively expensive either. A ceasefire deal in Gaza is uncertain, but there are some hopeful signs from key players that an agreement could happen soon. There are indications from a Washington Post article that both Russia and Ukraine might be considering ending the conflict due to fatigue. There is increasing pressure on the Chinese government to boost economic stimulus as growth is not meeting expectations. Here is the daily market forecast for swings. The weekly market bullish potential is still high. On the other hand, the daily market bullish potential is weak, so the market is entering the area dominated by volatility and is nearing a key resistance level of 5,650. There's huge uncertainty about Tuesday due to the volatility at the critical point, but it might still end up positive since there are no major events until the FOMC meeting. Also, the market bounced back from red start, approaching the next resistance level, which could lead to further market movement. Nonetheless, we clearly see that the risk has been increasing for many consecutive days, so we might see more volatility and potential downward pressure. Tomorrow might be weekly green, but a red day in the rally could happen soon because the market's daily bullish potential seems weak and volatile. Some additional insights are as follows. The current situation might be beneficial for stock market investors. Economic news is expected to remain favorable. Economic data might show a balanced, not too hot, not too cold scenario. The Federal Reserve is likely to continue providing positive messages. Earnings reports could be decent or better than expected. Here is devil's advocate. The opposing scenario is that the market might suddenly drop because of uncertain fears about the upcoming FOMC meeting. If the market falls below 54.50, it might create a chance for those who are optimistic to consider buying while prices are lower. The rationale of this scenario is as follows. Stocks might face some challenges soon due to high expectations for earnings reports at the end of July and anticipated Fed actions. The Federal Reserve is expected to start cutting rates in September, but there might be some uncertainty about how much and how quickly this will happen. A recent survey from the New York Fed showed increasing concerns about job security, suggesting possible issues in the job market. The geopolitical situation remains tense, with ongoing conflicts in the Middle East and between Ukraine and Russia. The political climate in Washington is uncertain for the stock market, with neither political party providing a clear positive outlook for equities. While the opposition scenario has a point, we do not think it is likely because it's more likely that investors will wait until the FOMC moment before going red. Regardless, viewers might want to be careful about the concerns raised by the opposing side. Here is the conclusion. Despite the weekly market bullish potential is still strong, the bullish potential for the daily market is weak, dominated by volatility. The market has been rising quicker than anticipated and is nearing the next resistance level at 56.50, which might lead to a downturn soon. There's an increased risk of a decline, especially since we've seen many days of rising risk. It's possible that we could experience more volatility. We still think the traders might hold optimistic positions, but you may want to consider securing some of your profits or adding more protection to prevent losses that may occur with the elevated risk. Viewers may be wise to consider both our main forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.